Good afternoon. Welcome to Connect, California MBA's monthly podcast featuring interviews, usually one-on-one, but not today, with movers and shakers, current and in this case future leaders in our industry. So today I'm really excited. We've got three of our future leaders that are going through our program right now. We're actually at Pepperdine University in Malibu. They just finished their first day of their first in-person session, so we're really excited to find out their thoughts on the industry, what's brought them to this point in their careers, and what they see going forward. But before we start, I want to thank our sponsors at the Real Estate Services Trust, or REST. So when a valued employee leaves your organization, questions often arise as to what went wrong, what could we have been doing better? And as an employer in the real estate services industry, you know that attracting and retaining talented employees is a top priority for you. And a competitive employee benefits package could be the solution you're looking for. So the California MBA has partnered with Marsh & McLennan Agency, a nationwide leading brokerage firm, to form the Real Estate Services Trust, or REST. The program provides real estate services industry employees competitive and affordable benefit plan options by delivering a quality benefits package. And actually this year we've added on Kaiser, so it's a new feature to the program this year, and for a lot of our companies that we're considering, that was one of the things that was holding them up. So if that was holding you up, Kaiser's now part of our program. We're including that as well. So if you're an employer with 20 or more enrolled employees, you can take advantage of large group purchasing power to access flexible and high quality plans that you wouldn't be able to access otherwise. So basically you get the big company plans as a smaller company in the industry. So click on the link below or in the description, find out if your company is qualified to join today. So, that out of the way, I want to welcome our guest here today. We've got JoAnn Lockard. She's the closing manager at American Pacific Mortgage in Roseville, and she's been there since 2012. Ben Johnson right here is an associate with Newmark Realty Capital out of their San Francisco offices, and he's been with them for a little over a year and in the business for about 13 years. And finally, here in the center, Chelsea Johnson. She's Director of Operations and Human Resources at CBC Mortgage Agency, where she's worked for about 2.5 years. So, welcome everyone, and let's dig into this here. So, let's start with you, JoAnn. So, there's a lot to talk about in the industry and the economy, where things are headed. But I always like to find out, how people got to this point in their careers. What drew them into the industry. We find out sometimes that maybe some people didn't exactly mean to get in the industry, and then they suddenly found themselves in the mortgage banking industry. So, JoAnn, let's start with you. What's your story?
Well, I started as a receptionist at a title company in 1999 and moved up to be an escrow officer. And then after that, moved around to different companies and landed at a credit union for a while. And then came to my current company, and I was a mortgage loan funder, and then became the closing manager of our company now. So, yeah.
Awesome. What about you, Ben?
I did not... I ended up in the industry by not being original. My older brother was working for CBRE in valuation and advisory services back in 2006 as a commercial real estate appraiser, and he really enjoyed the job and said that it was stable as far as income went and interesting work and a good way to learn the business. And so he was the one who got me an interview with a managing director at CBRE. So I started off in appraisal and was there with CBRE for 9 years. Really enjoyed that, but wanted to have front row seat to how commercial real estate deals get put together. So I got into commercial mortgages in 2016 and joined Newmark last year.
Okay. Big difference, size-wise, certainly between CBRE and Newmark, and different flavor, I'm sure, altogether.
Mm-hmm. Yeah, certainly. Newmark, is obviously a much smaller company than CBRE, which has, I think, 31 or 32,000 employees. But that size, I think, is one of the company's strengths and allows it to be very nimble and and to adapt quickly to market conditions.
Right on. Right on. Chelsea, how about you?
So I actually got into the industry by accident. So what had happened?
I figured one of the three.
Yeah. So basically what had happened was I was working for an insurance company, and I was looking for my next job to get me to the next job. And I had a friend who worked at a servicing company, and there was an opportunity to interview and apply in collections. In all honesty, I thought, this is going to be miserable. I'm going to hate it. I'm going to hate collecting on people's houses. I'm going to hate telling them that they are going to be foreclosed on. I had so much anxiety that I took the job with the notion of I'm going to quit as soon as I find the next thing. What I found is there was so much more to the industry that I didn't realize. And even with collections, there was so much more and so much more heart that you could put behind it than initially thought. From there, I was able to work my way up to the investor relations side and the due diligence side. After that, I actually ventured out, and me and my husband opened our own insurance brokerage. After running that for a few years, we discovered we weren't a fan of the insurance industry, and I really had the desire to come back to the mortgage industry. I looked and did research on my company and a couple other companies, and I really liked my company's framework specifically. And so I reached out and applied, and thankfully it worked out, and I have been there now for 2.5 years, and I'm working my way into solidifying myself in the industry.
Right on. Well, yeah, I knew someone would find their way to answer that one with an accidental. But then you came back to the industry, so that, it's not accidental the second time.
Yes.
So let's talk more about sort of the state of the market. And since we've got both someone from the commercial multifamily side and then you folks from the residential side, let's start on the residential side. So. JoAnn, question for you. What are your thoughts on where we're at? And I'll let you choose how you want to answer this one, or which question you want to answer. So, rates dropped sort of unexpectedly earlier this year. Do you expect that to continue this year, or are you sort of, where do you think we're at?
I think that the loans, the market ebbs and flows. And so right now at my company, we're seeing a lot of purchases are still strong. Refinances are actually really, because you said the rates dropped. I think that's going to continue to happen. I really think it's going to be a market where it's both beneficial to refi and buy homes. So there's lots of new construction homes that are coming up. There is a lot of homes coming for sale that weren't for sale last year. So I really think that we're in a good, strong market to continue to make someone a homeowner or refinance them into a better rate.
Awesome. Chelsea, what do you think?
I think that right now we have a lot of opportunity in the marketplace, and kind of what you were saying, it ebbs and flows. Mm-hmm. And I think that a big part of that is understanding that we have a lot of opportunities, and it's just how we make the most of them. While rates may go up, they may go down, the desire for home ownership is still there, and that's what I think that we have a lot of opportunity to focus on. Mm-hmm.
Right on. Totally couldn't agree more. So Ben, in your neck of the woods on the commercial side, where do things stand?
Well, we saw, to go back to market conditions at the end of 2018, we saw a decline in acquisition loans at that time. Sellers, especially in primary markets, were unwilling to come up on asking cap rates. So a lot of our work in late 2018 was related to refinances. With the big drop in the 10-year Treasury over the last few months, it's come down over 100 basis points from its peak. I think that we'll see an increase in sales activity as sellers put more properties on the market, hoping to get a lower cap rate than they could have gotten at the end of last year. So I think we'll see a big increase in purchase loans, and also some of the overall increase in volume that I'd expect to see in the next few months will come from people who were considering refinancing their property a few months ago, but maybe interest rates were too high. Now that the treasuries are down, I think it'll get a lot of people off the fence.
As I say, bring some people back in. That makes sense. All right, so again, since we have some of our future leaders here with us today, we'd be remiss if we didn't talk about the future of the industry, beyond just the next 6 months of rates or next 12 months. So, since you're all living it here, you're going to be living in the industry for the next few decades. So, hopefully for many, many years. So what's I want to get away from sort of the just rates or market conditions. What's the big idea that you see that is going to change the industry over the next half decade? So maybe let's start, Chelsea, with you.
I think a big focus, and we kind of touched on this in our meetings earlier today, is going to be the tech side of it and bringing forth and streamlining the processes that we have now to make them better, to overcome some of the other obstacles so that we have more opportunities.
Yeah, what about you, JoAnn?
I agree. I think that there's a lot of room to streamline a lot of the process, still have that human feel and that connection as a relationship base with the borrower or the loan officer in the operations center or whatever department you work in. But I also think that there is definite room for adding tech into the world that we're in mortgage, because it's just everybody has a phone and everybody wants something now.
So are you seeing, and this is something that I've noticed in the last couple of years, it seems to be a shift on that tech side, is more focus on the back end of the transaction. For many years, there was so much focus on the front end, getting everyone in the door using technology, and now it seems like the focus is all on closing issues.
It is.
Any thoughts on that?
I think so. I think there's a lot of room to use the systems that we all use, whether they're different or the same, to use the system for you and have it help you with crunching numbers or whatever the system is doing for you at that milestone that you're in for your loan. But I also think that there's still that human connection that you've got to keep on the forefront. It's not all about tech. I think it's very beneficial, but I think that we need to have things like this and human connection to make it feel real.
Can't automate everything.
Yeah, exactly.
Yeah. All right, so Ben, how about you on the commercial side? What's the big change that you think we'll see over the next 5 years, or maybe not necessarily a huge change in your side?
Well, I think that the closing timeline for your typical commercial loan will compress. If it's 45 to 60 days right now, I think it might come in 5 to 10 days on average because of technology. So we are working on a loan right now with a lender whose entire process, underwriting, document upload, closing, everything is online. That's pretty unusual, but a lot of the lenders that we work with have portions of the loan process online. So there's a lender that we work with where they have a checklist online, and as you upload documents, then that item on the checklist goes away. So you can see where you are in the underwriting process. And quite a few of the lenders that we work with have secure sites where you can upload documents. But so that should help from a loan processing perspective to speed things up. There's another lender that we work with. They're the only ones I know that are like this, but they'll allow their borrowers to DocuSign everything during the loan process, which saves a lot of time. They're not allowed, borrowers are not allowed to DocuSign the loan documents themselves. We're not there, but that has led to a very speedy process for that particular lender. So I think that will have an impact on how quickly loans can get.
So on your side, Ben, on the commercial side, do you think it's more, is it a generational issue, is it a technology issue, or is it just the way the business works on the commercial side that is holding every company back from doing everything online or everything DocuSign? Or maybe a little of everything.
I think a little bit of everything. I think that not every company or not every lender sees the value in doing that. We work with some life insurance companies that have a certain allocation of loan dollars that they want to get out each year. In one lender's case, it's $2 billion. They get that $2 billion out every year. The way that they're doing things, analog, without kind of an online component to what they're doing other than emails and things like that. So for that lender, there's no need to speed things up. They're doing just fine the way they're doing things now. So I think for the banks, they're competing with other enormous institutions that are consistently trying to get a competitive edge on them. So they're in a very, very competitive space where they may not be getting all the loan dollars out every year that they want to get. And I think for a lender like that, it makes sense to really streamline things. Yeah. But for some of the lenders that are doing, $300 million to $2 or $3 billion a year, and are able to hit those lending benchmarks every year, then they don't feel like they need to update their systems.
All right, makes sense. So I guess we may have already answered this question, but how is technology changing your side of the business in particular? So anything that not necessarily that the customer sees, but maybe on your specific side and behind the curtain. So maybe Chelsea, what do you think?
I think it's, again, touching on what you said, is streamlining the process, making it a lot faster and making it beneficial for the back-end process and for us on the back end working on it. Having those automated processes in place will help streamline it and make it faster, which in turn benefits everybody, the industry, the borrowers, as a whole.
Yeah. JoAnn?
There's a lot of talk recently about automating, let's say, underwriting or the closing process with the online notary. So you could streamline that part of the process and make it more beneficial for, let's say, if you streamline a bunch of the underwriting piece, that's going to cut down on jobs for underwriters, right? But maybe not, because maybe it could do those easier loans and those lower risk loans. You could automate those and get an approval right away. I know that a lot of companies are looking at that, but also it still is beneficial to have the underwriters for the challenging loans or the ones with down payment assistance and things like that. And same with notary. The online notarization might cut down on notaries in your state because someone else could be doing it in another state. But there's opportunity elsewhere. So I think that even with technology cutting back on jobs, it opens up something else because you still need a person that has the knowledge to deliver it for the more challenging situations.
Interesting. Okay, makes sense. All right. So we've asked in our other episodes. We always ask. We always wind up asking a question about millennials, and but we ask people who aren't necessarily millennials themselves. Now I've got 3 of them in here, so I'd like to ask you millennials here. I can't escape, this episode without asking it. So we've asked others about it, but I want to ask you. So the industry, we've heard it for years and years and years. I've been at the California MBA for almost 16 years now, and every conference you go to, especially on the residential side, there's all kinds of talk about how do we get more millennials into our business, and everyone kind of looks around each other and shrugs, and we're not sure how to do that. So without speculating, because now we actually have some here, what do you see that your companies are doing well, or any companies in the industry are doing well, to not necessarily on the consumer side, we'll get to that in a minute, but on the attracting, retaining millennial talent? What do you see that they're doing good? JoAnn?
I think that you need to target to what the interest is. So technology, right, is on the forefront of a millennial way of thinking. They want it faster, they want it quality, they want it, now. In general, it's engaging maybe a millennial group to work as a loan officer or come in as an ops staff or an appraisal department, and getting interest and having them come in and learn the business because they might not know it. So maybe it's targeting that generation and that millennial group to then go, there is a benefit in buying a house. Just because your rent could be the same as your mortgage, and your net worth is going to be more if you have a mortgage, right? You have collateral there, you have an investment. Whereas, maybe they're not going to listen to an older loan officer, and they might listen to someone that's their own age. So I think investing and being diverse with age groups and really trying to drive forth getting interest for employment from that younger group is where all the mortgage companies need to go and think about.
Absolutely. What do you think, Chelsea?
I think kind of piggybacking off of the same thing, I think that that companies in general need to look at what is important to millennials and look at the statistics. A lot of millennials are working multiple jobs and still don't feel that they are worthy of owning a home. And it's that sense of educating them and letting them know, hey, you are worthy, and here's how we're going to help to get you there. My company does a great job about doing that and making sure that everybody at our company knows that we have help and access to home ownership if that's what we desire. And I think that a lot of millennials don't have that, and I think if we show them that we are willing to accommodate to their interests a little bit or accommodate to their needs and how they're feeling, then that would intrigue them more to, or entice them more to, want to join a company.
Big education. I agree.
Yes.
Yeah.
Yeah, education's the biggest component on it. I would say is, you don't know the other side of it if you're not asking.
Mm-hmm.
All right, fair enough. Then what about you on the commercial side?
Well, first of all, I think, well, I should say that I'm probably not technically a millennial. I think I slip into Gen X.
I
but-
think-
I'm right on.
Thank you.
But
I
too
think
old.
I do too.
Yeah, too old
But that's
to be a
okay.
millennial, but
For purposes of this,
That's
we're-
okay. Yeah.
close enough, right? But our company has a number of millennials that are employees, and in the office that I work in, there are two very, very sharp employees that are millennials who work there and are very, very good at their jobs. So I think the millennials are coming into the industry. What I think is happening is it takes them some time to filter in, because I think that there are a few people who graduate from college and think, I want to get into commercial mortgages. There isn't a short and clearly defined path from college graduation to this industry. So that's the first thing, is that I think it just kind of takes a while for people to
Do
get
you
in.
think
It takes
that's,
a few years.
not to cut you out, but I'm curious, is that something that industry can do something to change, or is
Sure.
that just the nature of the business
How
that
do
it
we
just takes a
drive
while
that?
to sort of find your way into it?
Well, I think that when college students are entering their junior or senior years and are starting to think about employment beyond graduation, I think the commercial mortgage industry is not even on the list of potential industries that they think of, because they might not realize that it exists, which is strange to say, because there are
It's all
so
around them.
many commercial properties throughout the country. But I think that given the size of the marketplace, it's a quiet industry, and it is one where there are relatively few players, given the amounts of money that there are that you can make as a property owner or broker or whatever. So I think that there is an awareness issue that the industry has on college campuses, and but I think that once millennials become aware of what the industry is, they have many of them have an inherent interest in it, because my understanding of the interests of millennials is that they value experiences and places. And that's a huge focus of social media, is the places that you visit. And a lot of the pictures that you see on social media are, look at me at this particular place, right? Well, commercial real estate, I mean, all it is it's just a place.
Yeah.
It's a very specific place that you can define on an ALTA survey and a legal description. But I think that resonates with millennials, the individuality of places and the unique characteristics that each place has.
So do you think we could be doing more, offering more internship programs, or what are ways do you think we could drive more education or more desire to come into the marketplace?
Yeah, I think internships are a very good place to start. If a college student does an internship with a commercial real estate company, chances are when they go back to school the next year, they're going to tell their friends about it. And it was good, and there are people there that are making a good living doing it. And my older brother works for a commercial real estate brokerage company, and they actively offer internships for college students, and that program's been very successful. Our company offers internships as well, so we have an intern in our office right now that attends a local university. I think the other thing that's potentially appealing to millennials about this industry is that you can make a very good living in commercial mortgages or commercial mortgage brokerage without working, investment banking hours.
Right.
There's a good opportunity for work-life balance, and
Yes.
I think that is very appealing to millennials.
Yes.
I think there's an opportunity for education with commercial and residential to the college campuses for sure. I think that the industry in general needs to tap into that and go out educating,
Yeah.
letting people know. You have a brother in the industry. The reason why I got the job at the title company when I was 20 as the receptionist was my friend's mom. And she was a commercial, actually, escrow officer. So I went a different department than she was in, but it's knowing people too. So if you don't know, you don't know the mortgage business. It's so many things.
Well, and there's so many different facets to
Yeah.
it too. Like we are all in different departments and we all handle different things, and there's so many opportunities in the mortgage industry, and I don't think people are aware of that. Just I myself, my little sister just graduated, and I was talking to her about it and steps that she could take if she wanted to get into the industry, and her mind just was blown of I can make a decent living, and I could do this, and I could do this, and I don't have to be in this department, and I don't have to do this, or I could do sales, or I could do this, and her mind was blown with how many opportunities there are available and that she wasn't aware of.
Yeah.
Yeah, you're all three absolutely right. You don't have to necessarily be a super people person, but if you are, there's a great opportunity there too. So you're right. Opportunities are endless. So. So turning towards the consumer side, so here's the customer end of this for millennials. So what strategies are you seeing that are working to attract millennials? I know it's a huge race out there right now to grab this millennial customer base that is now the biggest home buying base out there. And here's the sort of the dopey way of asking that question. Is it just about having a fancy app and posting witty things on social media, or is there a hard strategy underneath that? So maybe Chelsea, start with you.
Yeah, absolutely. I think that social media is a big strategy because it is a big part of everybody's social aspect. And if people can connect with you on social media, they feel like they know your business, they feel like they know your model, your mission, your values, and they feel like they're almost contributing to you as much as you're contributing to their businesses, and I think that is a big part of that kind of gets overseen. And I think that with millennials specifically, it's identifying and again educating those factors and putting them in place.
JoAnn, what do you think?
I completely agree. I think that there's a way to use social media for businesses in all facets, and I think that a lot of times if you personalize it as well and show your culture of your company and your culture of hey, home ownership is awesome, and you have diversity throughout your entire page, and you try to engage people in all different age groups and facets. Reverse mortgage, you try to get the millennials that are graduating college into homeownership and show them why it's so important. That can pull them into the business too and get a job with you because of the tech things that you're offering. I think it's just being cutting edge and being with what's popular. I think that's where you need to tap into those markets and have your marketing be focused on that, and just have the realization of showing this is what our company is about.
Yeah, it's funny.
It's a
some of
personal
the
touch.
more effective social strategies that I've seen in the past have been, it having nothing to do with the products themselves,
No.
but have to do with the culture of the company. Where a company will post about their a 10-second snippet of a party they had at their office,
Yeah.
showing how much fun they have and that they're real human beings, and So I think you're both right. Ben, what about you on the commercial side? Again, it's a totally different customer base and what they're looking for, but what strategies are you seeing that are effective?
Well, I think that if someone is adept at using social media, they can really use that to their advantage in the commercial mortgage industry. One thing that we see happen a lot in commercial mortgage brokerage is that when a mortgage broker closes a deal, he or she will post a closed transaction flyer online on LinkedIn or on a Facebook page or something like that. It's just a simple, visually kind of a postcard-sized advertisement that you closed a deal and basically what it was and a picture of the property. But there you've created, an online place where you're generating buzz about your business. So I think that is appealing to potential millennial talent, that if you're good at social media and you're comfortable using it, then you can use that to build your own book of business. And then the second thing I would say goes back to something I mentioned earlier, which is that in this business, once you build your book of business and have some momentum in closing loans, there is an opportunity for a great work-life balance. And I think that is something that companies can use to attract millennial talent.
I think ease as well, and thinking about it a little bit more. We've talked about how technology technology can drive our systems and make it streamlined. I think millennials want to feel that. They want to feel the ease of a process.
Yeah.
They don't want to feel like homeownership is this big to do. I've got to sign all these papers. I've got to go to closings. We hear horror stories about it, and it just gives you such anxiety before you're even there. And I think a lot of it is if we can make the processes easier and ease of access for millennials, they'll be more likely to want to buy more, do more, and drive that industry.
Yeah, and I think we often forget. I know I forget. In my role, I forget that so many of these millennials, they saw their parents go through such a rough time in the mid to late 2000s, and I mean, there's good reason why a lot of them may have some hesitancy about diving in as a potential homeowner. So I think you're right. If we can make the process simpler and more transparent and better educate folks, then it'll do a lot towards helping folks who are a little more hesitant to jump in.
I think that's why it's important to show those celebrations, like you said, show the property, show there's pictures of, if I was your loan officer with a key, there's pictures of them in front of their house, their whole family. It's a huge celebration. You're giving someone, an investment in home ownership and or a commercial real estate. They could open up a grocery store or whatever the case may be. That's something to celebrate, and I think that's positive piece of social media is huge too for millennials to look at and go, wow, that's cool.
Yeah, it's interesting. We had this is now going back for me when I first started at the California MBA. One of the first articles I wrote, helped write for our chairman at the time, and he was talking about how he got into the business, and the way he was describing it, I mean, he vividly remembered, the first person he helped buy a home, and I'm thinking and now kind of I don't know why it popped in my head, but it did. That was the opportunity if he had that technology at the time to post that on social media and talk about what a great experience it was. But for years and decades, it was just the only person who knew about it was him. And it was just kind of buried up in his head. But it was a great story, and I mean, if I was a potential homeowner, that would totally speak to me. So I think you're both right on that, or all three, right? So anyway, now finally our last question here. So we have to do a bit of self-promotion here about the California MBA's Featured Leaders Program. But the way I'm going to pitch it is I'm curious to know what your thoughts are. You're obviously committed to your own professional development. That's why you wanted to be a part of the program and why we're happy to have you there. But I'm curious, what are you seeing as far as companies helping promote professional development at their own companies? Obviously, your three companies are doing a great job. Are you seeing that in the wider industry, or is that something that you think is lacking? Ben, maybe start with you.
Well, I'm not really sure how to answer that. I can only speak to what my experience is here, and our company is willing, and not only willing but happy to make investments in professionals of all ages, not just people in their 20s. People who are older than that as well. If that employee wants to broaden their horizons, meet other people in the industry, network, and build up their resume. I think that it is more difficult for a large company to make that kind of investment because there are so many different people that need to sign off on that type of expense for the company. One of the benefits to working for a smaller company, at least compared to my first employer, is that the ownership of the company the ownership of our company was quickly able to see the benefits of investing in a program like this, and I'm the happy beneficiary of that.
Yeah. Chelsea, what do you think?
Personally, I think that we're lacking in the industry as a whole. Obviously, my company is great. We've got 3 people here that all jumped at the opportunity, and they sent us all. But I think as a whole, until I talked to you and Suzanne last year, I didn't know that this program existed. So it's also educating on what programs are out there that do exist, and then also it's lacking because I've been at other mortgage companies, and we don't have programs like this to be able to develop into bigger roles roles or leadership or opportunities that we see, but we see that there's a clear need for it and there's a clear benefit to it. And so in participating in this, thank you very much. It's been exciting. I've learned a ton, but I think that now the next approach is for more companies to do this, more companies to come up with leadership trainings, leadership programs, and to be able to build their employees up. Because touching back on the millennials want to grow, they want to progress, they want to have that title, they want to feel like they are loved and valued at a company. And so being able to invest in their education and being able to invest in them as a person will empower them, and they'll want to invest back into your company. They won't want to go open their own business and go behind your back and everything else. They'll want to do it with you so that you guys can all learn and grow together.
Absolutely. That's the hope, at least.
I agree. So I feel very blessed for the company I work for because I'm actually in an emerging leaders group within my company. So there's about 50 of us, and it's a year-long program that we get chosen to. It's called Emerging Leaders. And we also have Kaizen groups, which is you're giving your employees a voice to then for process changes or policy changes or, hey, I have this great idea. And then we have groups that are above that, you know, it could possibly turn into a procedure for the whole company. So I really feel blessed in that sense. We have regular leadership trainings as well, personal development. We have book assignments that we read. So they really, really invest in making you a better person and making you feel that you're able to speak up and have a voice within the culture that they provide to us, and they really want our feedback. So it makes you feel valuable besides doing your normal job. Mm-hmm. So it's across the board, not just for leaders. So it's very exciting.
Awesome. That's really great to hear. That's really great to hear. Yeah, it's funny. We over the years going to conferences and helping put together conferences and being there, you hear so often companies talk about what can they do to get more people involved at their companies and have a stronger voice and help them with professional development. And I want to say to them, you should have them join the Future Leaders Program. And then maybe they do, maybe they don't. But obviously you three are a testimony that it works. So thank you all, and thank you to the companies who are sponsoring these folks this year. So that's all we've got for this episode of Connect. I want to thank JoAnn and Chelsea and Ben for giving me a few minutes of their time, and we'll catch you next time on our next episode.